Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. If you want to read more about what John writes on a regular basis, you can head to incomeinvestors.com, or you can find the link to the website in the description below. These days, investors are chasing the same names: tech giants, AI plays, and whatever stock that just surged because it was mentioned on some message board. But there's something investors shouldn't forget. Real wealth in investing can come from doing the opposite of what the crowd is doing. Take a look at Whirlpool Corp. They're traded on New York Stock Exchange under symbol WHR as an example. It could be a great contrarian opportunity for income investors. WHR stock isn't flashy. It doesn't dominate the headlines, but what it does have is a solid business model, a strong free cash flow, and a dividend that income investors can count on. And what's even better is that the stock is trading at depressed levels. Investors are ditching it. WHR stock is down close to 30% year to date, and income investors could really use that to their advantage. John?
Yeah, thanks, Mo. Whirlpool is hands down one of the biggest and most well-known home appliance companies in the world. It operates in North America, Latin America, Asia, and other international markets. Whirlpool products include everything from refrigerators, freezers, washing machines, dryers, stoves, and dishwashers to mixers and other small kitchen appliances. And the company offers its products under several brands such as Whirlpool, Maytag, KitchenAid, JennAir, and InSinkErator, which I happen to have in my home.
John, how is WHR stock doing?
If you look at WHR stock chart, you'll see the stock is really under pressure. WHR is, as of this recording, trading well below its 50-week moving average and 200-week moving average. These moving averages suggest that intermediate term and long-term trends are pointing lower and investor sentiment is bleak. Investors are so pessimistic on WHR stock, it now trades at its lowest level since 2020.
Do we have any read on why investors are panic selling WHR stock?
Well, mortgage rates are rising, which has hurt the housing market and renovations sector significantly. And both these factors impact the demand for appliances, the kind of appliances that Whirlpool sells. Plus, all the noise with economic uncertainty potentially causing recession here in the U.S. and slowing the global economy, investors are asking if WHR stock is a good place to be. Now, on top of this, Whirlpool reporting sales decline between 2021 and 2024 isn't helping either. Wall Street analysts aren't chiming in with better news either. They're expecting sales to drop again in 2025 and bounce a little bit in 2026. But despite all this, it's important to note that Whirlpool has remained profitable and is expected to make money going forward despite the decline in sales in 2025. Moreover, the company continues to generate robust free cash flow. Whirlpool isn't in trouble, just that investors have turned against its stock. So the decline actually makes WHR stock more compelling.
If you like what you see so far, check out incomeinvestors.com. While you're there, you could also sign up for our free special report titled 3 Income Stocks to Own Today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. And now back to the video. And that's why WHR stock is trading at such a deep discount?
Yeah, WHR stock is pretty much what value investors look for in stock. It's trading at a forward price to earnings ratio of 9.02. Price to book ratio of just 1.75 and price to sales ratio of 0.28. All these ratios are below their respected 5-year averages. Now, looking at these valuation measures, among others, it almost seems as if investors are pricing in a worst case scenario here. However, they might be ignoring Whirlpool's market share, brand recognition, inventory, profit margins, and ability to manage costs. Remember, the company's been around for over 100 years. So it's seen all manner of economic slowdowns and financial market volatility situations.
How do the dividends look here?
WHR stock dividend is very attractive. Some investors basically get paid a decent income to wait for the stock to hopefully recover. The current price, WHR stock has a dividend yield of almost 9%. It's a substantial payout from a quality company that's just going through a rough phase right now. And to make no mistake, this is not a yield trap. Whirlpool pays a quarterly dividend of $1.75 per share, which amounts to $7 per share on an annual basis. Even better, WHR stock has a very long track record of paying dividends over 30 years and consistently pays out no matter where we are in the economic cycle. In addition to all this, over time, Whirlpool has also raised dividends numerous times, and the company rewards investors in the form of share buybacks from time to time as well.
John, thank you so much for your insights. While investors are chasing AI stocks and other trends, WHR seems to be a compelling opportunity. There's no denying that the stock hasn't done well, and investors have every right to panic with sales having dropped and overall macroeconomic conditions not being in favor of Whirlpool at the moment. But it's important to understand that economic cycle change. They don't last forever. We know that interest rates have peaked. There could be cuts coming soon, and housing is starting to show signs of some stability. This is good for WHR stock. And also don't forget, WHR stock is backed by a fundamentally strong company with a strong brand, solid profitability, robust free cash flow, and a history of navigating through economic challenges. For contrarian income investors, WHR stock could be a great place to be. That's it for today. And make sure to go to incomeinvestors.com now to get our free special report on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. And in the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.